Hello, I'm Adam from MarketLife.com here with a video for Friday, October 6, 2020. So one of the things we want to be very aware of is length of swing. And what this means is, it sounds very technical, but what we're looking at really is just you can look at time, you can just look at points, just the amount that the market moves between these swings. And what we notice is that this current swing has been very fast, but we're about at the length of the average swing. And if I just go back in history, I can kind of highlight some more there. And you might draw those swings a little bit differently. But this is something we've been watching here over the past few days. And this warns us that this is not, even though a lot of the overbought measures probably aren't showing the market's overbought, we're a little bit concerned that in the very short term, the market might be a little bit overextended. So we need to be mindful of that. We need to respect that. It's probably not a point where we want to be banging into a lot of exposure. But one of the things we've been talking about with our members is looking at the full scope of global risk assets and seeing that this does appear. I admit I'm a little surprised, but market surprises. This does appear to be setting up for sustainable strength into the end of the year. So while we're clearly bullish in the longer term, and we have a number of scenarios that could change that, no sign of any of those scenarios happening yet. While we're clearly bullish in the longer term, over the next few days, we're a little bit cautious. However, looking at, this is kind of been our theme here for the past few days, really focusing on the best setups. The other part of this is we don't see a lot of small cap setup that we love. Tom and I have spent a lot of time going through these, and we're like, what do we give people in the video? Both of us came away today with, there's not really a lot I love. However, this kind of jumped out. USCR, US Concrete. This is set up for a buy above 35. I would not wait. So your trigger is not up here. That's too far. Your trigger is right above Thursday's high. Your initial stop is right there in that area. Let's get an actual price on that. So your initial stop is somewhere right smack around 32. You really don't want to be much higher. You can be a little bit higher. I think that's very tight. And you don't really need to be down here. For my eye, somewhere right around here is ideal. That will put your 1-hour target above this pivot. But that's okay, because you should be above that pivot on the day of entry. And if not, and heading into the weekend, you probably want to think about what kind of exposure you're taking home. You don't want to take a failed trade home, basically. This does report earnings and scheduled in 117 days. So earnings are not really a concern here, even though they've been for a lot of stocks here over this past week. This one's very far out. So that is a pretty good setup. And with all of these, one thing I did notice looking at this chart today, it can be more illiquid than you might expect from a $35 stock. So just be prepared for that and think about what implications that has for your execution. And we will see you back this weekend for another update. Thank you very much.